in the last 2 years. I'm a big
And
believer.
And BlackRock is a very...
which is Bitcoin.
As seed capital for its proposed...
And what do you think that trends? Over the last few episodes, I have been talking about blockchain. However, to really understand the essence of blockchain, we need to understand the main drivers when it comes to this new technology. And for me, the main drivers are institutions. Why institutions? Historically speaking, the main source of money and value is driven by institutions like bank, hedge funds, and prop trading desks. All of those institutions work together to provide value. And I got honored and lucky to interview the one and only Emmanuel Van Lood, who specializes on institutional blockchain investments. Emmanuel was an ex-BlackRock, and now he's the CIO, Chief Investment Officer of Stake Capital. What made you leave BlackRock and go all in blockchain?
So there were two steps. First, I got extremely lucky at BlackRock, working on opportunities that basically was kind of like right place, right time, and right people, right? Like senior management being supportive of some people trying new things or trying things a bit of a different way and, having some of their defects and just supporting because they see value being driven forward, right? So I got to a place early 2018 where I learned a tremendous amount, right? At the business level, at the product level, at an operating level. I got, alongside a few other eventually co-founders, I had an idea around the productivity of front office teams and real-time analysis of information. So that was really like one of the first big push into NLP, right? Where we were there. Startups, like many startups, go through different iterations and paths. Fast forward to late 2020, that startup is folding. That's a story for another time on why. Great learning, no regret. I joined my lead investor, GSR Ventures, as a partner to formalize a global fintech practice together with a very experienced partner out of Singapore. And as we formalize that fintech practice and start thinking, okay, on a more systematic basis, what type of themes do we want to spend time on? The managing partner of the firm asked us to revisit blockchain and crypto. And part of that motivation to do it at that point in time was I was an uncommon profile for a VC partner. I'm a former quant. I'm an extremely technical person, extremely deep in institutional finance. That is not a typical profile in VC, right? But in the context of crypto and blockchain, that's highly relevant. And so we start digging in blockchain while at the same time we put the fintech practice together. We end up forming the opinion that blockchain is essentially, that's how I open, when we're saying how do you recap in 1 minute. Blockchain is essentially a trusting automation at scale of financial services. And so as you start digging, we found the opportunity to be so big. Like I'm talking trillions of dollars in annual revenue that are going to migrate from legacy systems to blockchain systems that are going to be created by the fact that now you can go way bigger with much better economics, right? Well, I was like, okay, this is not about a fintech investment activity and the blockchain activity. This is overall the future of finance, right? And so if we want to really know where the best founders are going to be, where that future is going to be built in slices of trillions of dollars, we need to go all in, right? And that's kind of like that. That's how that transition happened. So I ended up going really far down the path of technical architectures in blockchain, regulatory implications of certain technical architectures, where the middleware, where the application layer were at. And then concurrently, I started leveraging extensively the network, the institutional network from my previous life, going to executives on the buy side, on the sell side, at some of the PSPs and some of the regulators to understand where they were at in their blockchain journey as part of their strategic roadmap. The realization, the validation became extremely strong second half of 2022, early 2023, that those firms were no longer learning about blockchain. They had a pretty clear understanding of how it could get deployed inside their business lines. and what were the expected outcomes of driving that. Their main hurdles were execution. Can you execute fully internally? No, not entirely. You need to partner. Okay, who should you partner with? It's very hard to screen startups. This is not the job of an institution. That's the job of a VC, right? So finding the right partners, finding the right jurisdictions to start with, since you quickly touch regulation, and then de-risking that execution in terms of, okay, what are the first asset classes? What are the first solutions that could actually get into production with effectively less overhead, right? That validation became so strong that this intersection of blockchain and institutional finance became the central part of my investment thesis, right? And started driving a lot of conversations on the LP side and on the founder side, realizing that we are, and I know it sounds arrogant, but that's also very French, so it's okay. But we're basically in that unique spot where there isn't any VC investor with that degree of access on the institutional side and that degree of deep knowledge around legal, operational, technological, business, and product matters on the institutional side that could therefore connect with the best startups to go find the businesses that within 5-10 years will be generating 10, 20, 50 billion in revenue a year, because that's what we're looking at.
100%. That's quite interesting because we're talking about billions and even trillions here. How do you think, putting aside like what happened 2015, 2017, like every bank went to build their own private blockchain, this is in the past, but like moving forward with tokenization and like collateral movement, how do you think like the big boys, Goldman Sachs, BlackRock, JP Morgan, be it sell side or buy side, are going to interact with the blockchain? And what do you think that trend is going to be? Wait a second. Before proceeding, let's remind ourselves, what is blockchain? And Emmanuel will explain it for us. So from an outsider perspective, from someone who doesn't like understand blockchain, Emmanuel, how can you explain it like in 1 minute? And why this should guy be interested and should care about it?
To me, the simplest way to explain blockchain is essentially an open source enabling technology that's able to do one thing better than pretty much anything we have seen today. It's able to drive automation with trust at scale, especially for sensitive applications, which are financial services. So that's why people should care. People should care because financial services are so big, so prevalent in our everyday lives that rethinking their efficiency, rethinking their ability to serve more tailored, more specific use cases, rethinking their robustness and resilience has far-reaching applications in how, as individuals, we go with our daily lives, how businesses from small to huge operate, expand, move forward. Like, to me, this is the most fundamental rethinking of value creation of the last 40 years.
Oh, that's interesting. And following up on what you're saying is quite interesting, but do you think it's going to affect like third world countries starting like more like retail investors, or like more like on population size, more like third world country, or like high classes like US, Europe? Like what are your thoughts on
So I expect actually both. And to be fair, crypto started in retail, and crypto started in retail because that's the only place where it could start. And crypto inside retail actually has had a pretty significant traction with emerging markets, because from the standpoint of emerging markets, the status quo in terms of, broadly speaking, financial services is a decade to 3 decades behind developed markets. And a lot of that barrier is a bit of like a path-dependent barrier where it's like, okay, it's not like they didn't realize they could do something different. It's just the cost of doing something different was prohibitively high to get started, up to the point where you get this extremely scalable technology, very easy to access, notably in mobile, where mobile penetration, including in emerging markets, is astonishingly high. And suddenly, I think a lot of those emerging markets realize that you don't need to go through B, C, D, etc., to eventually go from A to Z. You could actually jump pretty much entirely from A to Z with those better technologies, right? So that's crypto. Taking a bit of a step back, to me, the penetration of blockchain, right, already as an enabling technology, you're going to see it everywhere. It doesn't matter whether you're developed or emerging. It doesn't matter if you're retail or enterprise, but it will, in my opinion, start for different reasons. Like when I look at emerging markets today, my first reaction is not to say, okay, banks in emerging markets are going to migrate their backend on blockchain, right? Because then they become more efficient. No, for me, where it starts in those regions are fintechs built on blockchain architectures, leveraging banking partnerships to have extremely efficient non-custodial financial services pushed to people that up until today, for 80% of them, are unbanked because the starting cost is impossible. Well, when you look at things from the developed market side, right, we already have fantastic banking services. We have great insurance, great lenders. The type of needs we look at from the developed market side, they are different, right? We are looking at, you could say, cross-border payment is an example. We're looking at enhancing the rails through which we're moving cash. Like, should we today in the US move most of the cash through checks and ACH? I mean, you're talking technology from like 1970, if not older. There are probably better ways to move most of the money that's moving around, but we already know how to move a lot of money around, right? When you go into the institutional side of the industry, institutional finance is mostly a developed market story, because investments and instruments that exist in emerging markets are typically created and transacted by institutions from developed economies, right? There, the needs, again, they reflect the stage of advancement they are at. So when firms tell you we're going to tokenize all our funds, when firms tell you we need to rethink clearing and settlement of securities, we need to rethink intermediation in the distribution of wealth management portfolios, this is not a need you're going to see in emerging market yet. These are today humongous business opportunities, but the fact that they are humongous doesn't mean they are perfect, right? You look at your margins and you say, okay, I'm getting a 30% margin, I'm getting a 40% margin. You could actually increase those margins by 10 to 20 points by having a better architecture to do that, right? 100%. You're counting this in tens to hundreds of billions of dollars in revenue a year, whether this is emerging market or whether this is, developed market. But where it's starting, why it's there, to me, is just not comparable. It's just apples and oranges. So having that appreciation for where people, where countries, where regions are coming from, right? I think provides the right perspective to think about, okay, like, why are people making a big fuss about it, right? Whether regulators, whether entrepreneurs, like, or investors, like, why are we overall making a big fuss about it? Because it transcends crypto, probably by like 1,000x.
What made you leave BlackRock?
Current, top of line. I cannot have all of that being public.